What's up, guys? Feed you information here. We have stock market news update for September 30th. Yes, this is yesterday. Yes, I am a day late. I do apologize, but I have it all set up and ready. So let's dive right into this. We have McDonald's, UPS, FedEx, Toll Brothers, and Hooyah Inc. This is going to be the 7th video of the series. So let's go ahead and start. McDonald's, we have delivery service DoorDash is offering customers 1 million McDonald's Big Mac sandwiches for only 1 cent plus fees, because you can't make it completely free, until Friday of this week while supplies last. The promotion is part of DoorDash's delivery partnership with McDonald's. Here's how to take advantage. Set up a DoorDash account and order a Big Mac. At checkout, use the promotional code 1MBigMac. No other purchase is necessary, and those who do participate will automatically enter into a contest with a chance to walk away with $1 million. Where the winner is selected at random, only one offer is allowed per person, and there is an age limit of 18 to participate, just like everything else. Now let's move on to the next the next article. We have UPS. So UPS wins first broad FAA approval for drone delivery. The approval is a milestone in commercial drone delivery, which companies including Amazon, Uber, and Google parent Alphabet racing to add unmanned aircraft to their fleets to save on costs and deliver goods faster. The FAA's Part 135 certification, which charter airlines use, gives UPS the ability to fly at night and carry cargo heavier than 55 pounds. The Atlanta-based company in March started flying medical samples by drone for a hospital in Raleigh, North Carolina, which is actually pretty close to me because I stay in Charlotte. Now, what is the FAA Part 135 certification? So there actually is a difference between two different ones. So the FARs were designed to promote aviation safety and protect passengers from unnecessary risk. Under the FARs, aircraft operations conducted by privately owned aircraft are governed by FAR Part 91 regulations, while air taxi or private jet charter operations are governed by FAR Part 135 regulations. Now, I know they just have to make things as complicated as possible. To me, that wasn't a simple way of explaining it at all, but I do understand. So if you guys don't understand, feel free to let me know down in the comment section, and maybe I can do a video covering what FAR 91 and FAR Part 135 is. Anyways, though, to get back to the actual article, this covers most of what the article is already going to talk about. So here we go. So Wing is planning to start trials of consumer goods delivery by drones with Walgreens and with UPS rival FedEx in Christiansburg. So this is actually going to be Alphabet/Google with the Wing. That's their drone product. But anyways, Virginia this month, approvals for some tests, unlike UPS's broad certification, are limited to small areas, and restrictions remain at flights over densely populated areas. So clearly they have the same kind of mindset that I thought of immediately when I read that. Flying drones at night carrying 55-pound cargo. If that drops, you're going to kill somebody. So you got to be careful about the areas that you're flying that around, clearly. But anyways, let's go ahead and move into the next one. So we have FedEx Cloud Dojo accelerates digital transformation. So FedEx needed experts to build and operate a cloud platform. So CIO Rob Carter found a solution in the Cloud Dojo, a boot camp for cloud native engineers. One of the nagging challenges IT leaders face is cultivating enough talent to adopt and implement cloud services, so they often resort to poaching from other companies or scoring universities for engineers schooled in modern computing skills. But that piecemeal approach can take precious years that companies can't spare. FedEx is trying a different tack, teaching its own engineers how to build new applications and rewrite legacy applications that run in the logistics company's hybrid cloud. This homegrown team called Cloud Dojo has reskilled more than 2,500 software programmers on how to work with public cloud software and several complementary technologies, says FedEx CIO Rob Carter, who initiated the effort. The dearth, what kind of word is that? In tech talent has CIOs training up existing staff to keep pace with digital disruption. Some evidence suggests that they aren't doing it fast enough. While most organizations believe they are reskilling their teams, 52% of employees surveyed said that they need better upskilling while 34% report that advances in tech call for new skills in the workplace, according to Gartner. This leads to a loss of engagement, decline in motivation, and an increase in workforce attrition, wrote Gartner analysts. God, these people's names. And John Santoro in the 2018 report, Reskilling Strategy Needs to Evolve. So yeah, they're basically just training people, getting them better, just like how Amazon has been doing that, Microsoft has been doing that. They're basically just following what every other tech company is doing with the cloud and whatever tech like they're preying on. They're just training people, getting them all set up. Pretty sweet. They complicated in the article. I don't know why, but moving on to article number 4, we have Toll Brothers. So before we get into Toll Brothers, if you don't know what this company is, it is a smaller company unlike the other ones. So I feel the need to just go ahead and give the bio. Toll Brothers engages in the design, building, marketing, and arranging of financing for detached and attached homes in residential communities. It operates through the traditional home building and city living segments. The traditional home building segment builds and sells homes for detached and attached homes in luxury residential communities in affluent suburban markets. Check out Robinhood right now. It wrote and twice, and cater to move up, empty nester, active adult, age qualified, and second home buyers. The city living segment buys and sells homes in urban infill markets through Toll Brothers City Living. So the CEO is Douglas C. Yearley Jr., the employees 4,900, headquarters Pennsylvania, founded 1986. There's the market cap, there's the price to earnings, which you should use Yahoo Finance because the price to earnings on Robinhood normally isn't that accurate. Dividend yield, that one's typically accurate, and then average volume. So that's Toll Brothers, Toll Brothers on Robinhood. So the article, Toll Brothers is planning a large mixed-use development adjacent to Audi Field in Buzzard Point, eyeing the redevelopment of a prime piece of property in one of the district's most attractive neighborhoods for developers. The Pennsylvania-based firm is pursuing the redevelopment of the current home of Capital Building Supply, which sits on a 1.4-acre property at the intersection of Potomac Avenue and First Street SW, according to a spokesman for Toll Brothers' multifamily arm. John, you guys can try to pronounce that last name. The company's national director for brand and marketing said Toll Brothers is planning for at least 400 residential units and 20,000 square feet of ground floor retail. The company is also hoping to build a hotel with 175 rooms and an underground parking garage on the property. That sounds pretty sweet. He added the company plans to break ground next year and begin delivering the development by 2022. However, he did not provide any additional details on the project or answer questions about the financing behind the redevelopment plans. DC records show that the 2 parcels comprising the site sold for $53 million in late August. The owners, several members of the Pettis family, known locally for their management of National Capital Bank, sold the land to a Delaware LLC. That company transferred control of the land to Toll Brothers immediately afterwards, records show. The developer has long been interested in investing in Buzzard Point. Toll Brothers was said to be one of several firms on DC United's short list to tackle a pair of sites at the foot of the soccer stadium. Hoffman and Associates ultimately emerged as the winning bidder instead and could pursue residential, retail, or hotel uses for those properties. The area is set to see a slew of new development around the stadium in the coming years. All right, I'm going to cut it there, guys, because we're probably getting way too deep into the video now. I don't want to stray on one article for too long. So next up, we do have Hooyah. Now, this is a Chinese company if you guys don't know. But anyways, Hooyah, also called Hooyah Inc., also called Hooyah, you might as well just say Hooyah, is a holding company which engages the development of game live streaming platform. The company provides live streaming content for mobile, personal computer, and console games. It also offers content to other entertainment genres, such as talent shows, anime, and outdoor activities. The company was founded in 2014 and is headquartered in China. So CEO is Rong Dong. I love that. Rong Dong. Employees 1253, headquarters Guangdong. Founded 2014, market cap of 1.51 billion, ridiculously high price to earnings, and an average volume of 3.55 million. They clearly don't pay a dividend. Now, Hooyah expands in gaming by investing in a Swedish esports company. One of China's biggest live streaming platforms is helping the Swedish company ESL get access to China's large esports market. Sweden's MTG AB surged after its portfolio company ESL, the world's largest esports company, said it is partnering with Tencent Holdings, back streaming platform Hooyah, to expand in the Chinese market for competitive gaming. ESL's majority owner, MTGAB, has entered into a bidding term sheet with Hooyah and plans to form a joint venture with the Chinese company. Hooyah will also buy $30 million worth of shares in the company, in a deal that will see ESL issue new $22 million in new shares. I don't think they needed to write new twice. And that gives the German company a pre-money enterprise value of $425 million. So they've gained 25%, the most on record. They were trading at 93.8 kroner. Don't know what that means. MTG earlier this year spun off its TV business to focus entirely on gaming and esports, the latter of which has grown rapidly in recent years, but has yet to turn a profit. Expanding viewership is an important factor in making the business profitable by boosting sponsorship deals, increasing advertising revenue, and selling media rights in the first 6 months of this year. The business posted a 174 million krona, 17.7 million operating loss. The partnership is a major positive step for MTG, Morgan Stanley analyst Julia said in a note. The strategic partnership with Hooyah gives MTG access to the largest and fastest growing esports market, further strengthens ESL's position as the leading and largest esports company globally, and increases ESL appeal to Western national advertisers. Pretty cool stuff. I probably got to look into both of these companies more than I already have. But anyways, if you guys enjoyed this video, make sure to throw a like. I would appreciate that subscription too. There will be one of these videos every day, as well as other videos. They may not directly tie to the stock market, but I try to make everything as financially related as possible. But anyways, thank you guys so much for watching. Feed you information.